Well, another wrap session in Wall Street Wrap with Mark Collingsworth of Vere Global on April the 17th on a Friday. And Mark, you say it was kind of a seesaw week, but at the end, this Friday, it closed up, something of a rally it closed on today, correct?
That is correct. The week was mostly flat up until today, where the market rallied up 2.68% by the S&P 500, and that primarily was news coming out from Donald Trump last night that they're going to try to reopen the economy by sometime in May with a plan. And then, of course, Gilead came out with a study that shows a lot of success with the Rezimir drug.
So do you think this will last and the market's open on Monday? Are we going to see another uptick in the market on Monday, or is it still pretty much undetermined?
That's really hard because we're kind of in unprecedented times right now. The stock market's rallied up over 25% in just 17 days, and the Federal Reserve is just throwing unimaginable amounts of money into the stock market. And I guess as long as you can print money, the sky's the limit.
Yeah, and how long can we keep doing that? Forever? Indefinitely? What? Isn't there a limit to how much money we could print and the dollar still maintaining any kind of value?
There should be. Just here in the market bottomed about 17 days ago, and in that 17 days, the Federal Reserve by itself has already added over $2 trillion to its balance sheet. And Bank of America yesterday came out and they're forecasting the balance sheet will hit $9 trillion by the end of the year. And to put that in perspective, 1 trillion seconds ago, caveman walked the European continent.
That does give a special perspective. But how does that infusion of federal money into a troubled stock market compared with other times they did that in terms of the amount of money they put in and how quickly it was inserted?
Well, that's kind of the unique thing here. In the past, the Federal Reserve, when they've actually came into an emergency, 2008, the problem had already was starting in 2007, and they didn't decide to throw the kitchen sink at the problem until the latter part of 2008. And of course, they got the stock market going. This time, they've actually started kind of at the beginning before problems began. But to put it in even more perspective, if you take Ronald Reagan's government spending program and his tax cuts, and you can combine that with the 2008 bailout plans that the Federal Reserve and government put together, which was the second largest spending program. You can combine both of those together, and it pales in comparison to just what the Federal Reserve has done just in the last 17 days.
Well, Mark, this raises the question, I think, to myself and a lot of other people. How long can they continue infusing such vast amounts of money, trillion-dollar infusions, into the market and without going broke, without emptying the treasury?
Well, when you can print unlimited amounts of money and it's just a fiat currency, I mean, it's the U.S. dollar is basically worthless. It just has a value to it because the United States government says it has value. Like I said, the sky's the limit.
So this is really an illusion of a dollar being worth anything, but we could keep that illusion going indefinitely, and that's enough to keep the market mechanisms working. Is that what you're saying?
Yes, you can keep that illusion going, but only for so long, because at some point fundamentals will catch up. Just like with the housing bubble, fundamentals, it took 10 years for the fundamentals to catch up, but they eventually did. And I think that's probably one of the reasons why the Federal Reserve is throwing so much at this, is they know that everything's an illusion, that they've just propped up the economy with massive amounts of debt over the last 20 years. They have to throw the kitchen sink and then some at it to keep the illusion going.
But again, how long could they keep it going like that with this illusionary money?
I have a feeling this might be their last hat trick. Once they get through throwing the kitchen sink at this problem, and we'll get through this coronavirus thing, my fear is when the next coronavirus, the next banking system failure occurs, there won't be a kitchen sink to throw at it.
Well, even before that, Mark, let me pose this hypothetical. If the shutdown continues for one reason or another, either the political back and forth or because there's real evidence that will continue to spread unless we keep everything shut down tightly, if this extends, let's say, even for another 3 months, how bad a situation will that be? I mean, will then everything start falling apart?
I will probably say, yeah, once you get past, most companies keep enough cash reserve, like restaurants. The average restaurant keeps about 14 to 16 days cash on hand for whatever reason to get through hurricanes, snowstorms, and so forth. But if this starts to stretch out, and we're already well past the 16 days, I have a feeling there's going to be a whole lot of more businesses going bankrupt. To over 22 million people have already filed for unemployment insurance.
So you're saying then that if it extends past another 3 months, we're in some deep trouble.
I'd agree. If you look, let's say Bank of America came out with earnings this week, and of course this is for first quarter, so March was really the only month that we saw a complete shutdown of the economy. Well, 1 month of that quarter was just horrible. I mean, the Bank of America, those earnings. That earnings report was worse than what they reported in 2008. What happens when you have 3 consecutive months of that in this quarter if we don't get the economy going in the second quarter?
So that's uncharted territory, is what you're saying.
No one's
Uncharted
ever,
territory.
even to the point. Charlie Munger, who's Warren Buffett's partner at Berkshire Hathaway, he even came out. They asked him a day on, I think, CNBC on an interview, "Are you guys buying stocks like you were in 2008?" And he said, "Absolutely not, because there's so many unknowns in this situation. You just really can't quantify it."
Well, Mark, sounds very bleak.
Well, it does sound bleak, but hey, we've been here before. The United States has pulled a lot of things out of the hat that I just didn't think they could do over the past 30 years. At some point, your magic tricks run out, but right now, this magic trick seems to be working pretty well.
And we don't know exactly or even vaguely when that time period is, when it runs out.
Correct. At some point, it'll reach critical mass. You can only print so much money. Is that going to be 9 trillion or is that going to be 50 trillion?
Well, how about the argument that the stock market is one thing, the general U.S. economy is another. So even in a situation like this, the stock market could prosper while everybody else is suffering economically. Doesn't one affect the other, or can they be held separate at least for some period of time?
You are correct. In the short run, and this is, and I say in the short run, it can last for several years. You saw that happen in the Great Depression. From talking to my grandmother who lived in the Great Depression, she always kept saying that they were already living in poverty in the early to mid 1920s, but yet the stock market was taking off like a rocket. At some point, reality has to catch up to the stock market, and that might be in my grandmother's situation. It may take 4, 5, 6 years for that to happen, but when it does, it's going to be time to pay the piper.
So in this situation, those holding stocks and corporations may do pretty well for a while the rest of us continue suffering, and we won't be paying the piper overall on both sides, stock market and general economy, for some time yet.
Well, right now, your tax dollars are actually bailing out Wall Street. And they keep kicking I love to say, this is one of my favorite sayings on this. You can only kick the can so far down the road before the can gets tired and starts kicking back.
Yeah, I mean, this bailout money, these stimulus checks, I mean, the little people are getting some of them, but the vast bulk is going to the rich and to the corporations, is it not?
Well, the money's actually going indirectly, not through the stimulus checks, but it's going to corporations in the form of loans, bailouts. The resorts have been negotiating deals. Boeing has negotiated deals for special loans for them and so forth. So, yeah, your big corporations are getting huge tax dollar payouts. And what's also kind of sad is a lot of these, now there's a few CEOs who actually are stepping down from their positions, but yet they're getting a $10 to $12 million severance package.
Right. Well, again, the old argument is among conservatives, at least, is that you have to support business because the business of America is business, and as long as the businesses prosper, we'll have that trickle down effect. So therefore, it is justified to be giving the bulk of the stimulus money to the businesses. Is that a logical argument?
It is a logical argument, but what's happening in this situation, that money's not really going to the corporations, it's really going into the stock market.
So therefore, the big stockholders are the ones that are making a killing on this.
Exactly. Your big investors on Wall Street are making a killing on this because just here, I mean, if you were sitting 100% cash 17 days ago, guess what? You've already made over a 25% return in 17 days on your money.
If it was in your power to design how the stimulus money is being doled out, how would you do it? You know, who gets the most of it? What proportions would you give to the big companies, to the stockholders, to the little people? How would you arrange for those stimulus payments for the best effect for the little guys and for America as a whole, for business and for the little guys?
Well, probably the best way to have done this is probably have gone to someone like, let's say, Paychex or ADP, who already had like the payrolls, um, that knew what the payments were for, people that work through ADP and Paychex,
Yeah.
and basically have the government basically make their payments or their salary payments to them for the next 30 days or 60 days, versus taking $1 trillion. $1 trillion would go a long ways on paying salaries for the next 30 days, versus basically taking that $1 trillion and going out here and saying, oh, let's buy $1 trillion worth of bonds, and then you have the hedge fund managers go out, buy the bonds, and then sell it to the Federal Reserve to get that money, and they sell it to them at a premium. So not only are they're getting free money, they're making a profit on top of the free money.
Yeah. Well, all right. Last question, Mark. When the markets open on Monday, this is Friday after the markets close with a small rally. What was it, up 700 points at closing today?
Correct. The Dow's up 700 points.
Okay. So come Monday morning, a few days from now, what happens?
Well, anytime you have a large run up, you usually see some kind of profit taking, but we really haven't seen any profit taking. We've had almost a straight 17 days of up markets. So if this was, let's say 2009, 2010, 1987, I could say you should see a pullback in the market. But when the Fed basically is putting, the Federal Reserve has almost put 5% of their balance sheet into the economy. We're a $20 trillion economy, and the Federal Reserve has already put $6 trillion of that on its balance sheet. Think about that.
Now, in proportion to the last infusions, how does that percentage equate?
When the TARP plan that came out, the bailouts for all the banks and stuff in 2008,
Yeah.
that was about a little bit over $700 billion, and that money was stretched out over the course of, months and years. In this situation, it's $2 trillion in 17 days. And that's just the Federal Reserve. That's not including all the stimulus checks the government's done on top of that.
So this has been like no other time for the stock market and the American economy. Despite the severity of the Great Depression in the 1930s, this is really unprecedented.
If you take the government spending and stimulus that's thrown just in the last 17 days, and you multiply that times 5, I still don't think you would even come close to where we're at right now.
Mark Collingsworth of Vere Global Financial Services, thanks once again for rapping with us in Wall Street Wrap. Thanks.
Anytime. Thank you.